Good morning, traders. This is Michael coming to you from Game Edge on Tuesday, August 5th with our pre-market prep session. As always here at Game Edge, we start with our three pillars: sentiment, structure, and trend. We'll currently start with our market trend model. Just a quick reminder, make sure you follow us at gamaedge.us. Check out our website. Sign up for our free newsletters that we had this weekend covering Captain Condor. Pretty timely, obviously, since we have an IC on today. Sign up, place your email here, and you can sign up. Also, check out our free courses. Game Edge Fast Pass. This is our flagship education course that we spent many hours developing. So make sure you sign up for that, and you'll get all of this free once you put in your email. Or come and join us at our Discord. We'd be happy to have you. We have a significant community of traders, and that we're helping each other demystify Gamma, Charm, Vanna, and everything that goes along with the SPX options complex. So jumping right into it, our market trend model obviously based on the tick index. The bolded white CT here is our cumulative tick. We spoke about being weak and within the overall colored ribbon yesterday, but what we would need to see for a rebound back to the upside. So we started moving back over the short-term moving averages, which was our trend and momentum indicators. And then we emerged out of the colored ribbon. This is the tick US, is a little bit noisy. This includes all of the regional exchanges. The tick ARCX, which I'll show here in just a minute, is what we use for our mechanical portfolio, which we have a trigger day for our mechanical portfolio back to the upside. Draw your attention to the breadth indicator here, new highs versus new lows. New highs were just barely outpacing new lows, so not a significant move there. But our filtered cumulative tick was moving pretty rapidly to the upside, indicating plus 1,000, minus 1,000 larger block orders, institutions, as well as larger market participants. We're obviously buying versus selling yesterday, and then our cumulative tick finished at 230,000 to the upside. So a significant move there, and we're almost linear up on the cumulative tick. So again, more buying versus selling definitely occurring in the market yesterday. So we'll watch how we handle this move back to the upside. Was this just a short-term bounce? And we'll start seeing it fail at these moving averages and move back to the downside. So we'll check that out. Moving on to ARCX. We are emerging out of the colored ribbon again. So we're back up via the trigger day, which is a TC4 tag. And we have all of these back tested within all our education courses via our market trend model. And you can check out that and what the probabilities are of possibilities of gains in the future once these triggers turn back on. So quick takeaway, obviously want to see this remain above the colored ribbon, indicating our mechanical portfolio is turned back on. All right, moving on to the SPXA. This is our cruise ship. Obviously, these are larger institutional market players. All expiries turned on. We are call dominated. Obviously, these contracts don't turn over as rapidly as the SPXP, and we separate those so we can get a better idea and understanding of the overall options complex. And obviously, we use the SPX options complex because it's the largest and most liquid. So a quick takeaway is we've been discussing this 63.45, 63.50 area that we were watching. Obviously, we're oscillating around that pre-market, and you'll see there's a confluence of some other areas around that also. But on the upside of that, we'd be a little bit more bullish, looking up towards 6,400, and obviously the transition level up here is 64.45, and we see peak X up here is 6,500, so that's an upside look. And then to the downside, obviously be watching down towards 6,300, largest gradient here that could be supportive. Obviously, the SPXA doesn't have exerts as much force intraday as the SPXP or 0DT. So this is our 40,000 foot view. All right, moving on to the SPXP, we can see the IC very well outlined in the teal. I posted about that this morning. And then our deep dive this weekend, our newsletter was about Iron Condors and Captain Condor, so make sure you check that out. Posted on X. And then you can see our DEX transition for today, 63.15, 63.20. These are all expiries. Again, we're call dominated now, above and below spot price. So again, supportive type action on any pullbacks if we're above these transition areas. And then this gives you the goalpost for the day for the IC. Again, make sure you check out our education over the weekend. So we'd anticipate 6,300 to be a supportive type area as we pull back into that, as long as the market trend model as well as intraday volume indicates that market participants are speculating to the upside within the overall structure. So we'll watch this. But again, quick takeaway, call dominated now above and below spot price. So we'll look for supportive type action. Moving on to the delta balance of the SPXP, this has repaired itself pretty rapidly compared to what we were talking about yesterday. We were discussing these negative slopes on the right-hand plane and left-hand plane in the money, out of the money indications, as well as the delta balance. We were talking about that the delta balance actually projected on out in time towards Friday was actually down towards -1, and this has repaired itself pretty rapidly, at least in the left-hand plane, which is below spot price. We'd like to see the right-hand plane, this green dotted line, continue to the upside and cross back above 0. That would be indicating that short-term call speculating in short-term call dated gamma is going back into the overall complex. But you see that quick rebound in the delta balance, which is also turning slightly more bullish. And then our projection on out in time, we see that left-hand plane hovering around 0, projected on out into next week, but then we see the delta balance repaired through Friday. So we'll continue to watch this and see if the short dated call gamma continues to come back into the overall structure. Obviously, this is spot price sensitive. So as we move up, we capture some more of that out of the money call gamma, and that becomes in the money. But again, we want to see the out of the money call speculators continue to maintain the speculation to the upside, which continues to drive price mechanically, as we spoke about yesterday in our pre-market prep. So make sure you review that. GEX ratio, we talked about it around 1 and then dropping below 1. Historically, 0.5 to 0.6, 0.7 area is where you see a bounce in the overall market. Again, this is a put call ratio, but we add a gamma component, which is a time component. So this makes it much more sensitive to short-term dated moves within the overall SPX options expiry. And getting back above 1 gives the bulls and the call speculators the overall benefit of the doubt. Again, we'll continue to watch this. You want to see this GEX ratio continue to the upside. That would be indicating that more call dated gamma, short dated call gamma is going into the overall options complex and call speculation, which again drives price to the upside. So if we saw a divergence with SPX moving to the upside and the GEX ratio moving to the downside, that would be a cautionary look. But as if the GEX ratio is increasing and we see the confluence of the SPXP moving to the upside, then obviously call speculations going into the overall complex. Moving on to the net stack command, this is our highest sensitivity levels for the day. Obviously, we're discussing the IC here, and you see those in the money calls, left-hand plane integral, then obviously the right-hand plane, those out of the money calls, and the corresponding negative strikes for the IC there as we do that here at GameEdge. And then you see the net charm, 6360, significant overhead area for those out of the money calls. Those will continue to grow throughout the day. And then obviously those will most likely be a headwind. So I discussed that 6350. So it's kind of that sponge area that we're talking about, 6350, 6360, and to the downside, 6290, 6300. That was the top of our drunken sailor range yesterday. And we had a nice trade as we moved outside the drunken sailor range to the upside. So most of our members were able to capitalize on that as we discussed pre-market. Moving above 6,300, we'd be long for a move up towards 63.20, and then further to the upside. So again, sensitivity levels for today. All right, moving on to the SPXP 0 DTE. Obviously, we see the the IC outlined with the teal here, as well as our DEX transition here, and then our GEX transition to the upside. So we have a confluence of the upper leg of the IC and our overall GEX transition. So again, above 63.55, 63.60, we'd be looking for 6400. You see COI up here. This is highest call open interest, as well as PGEX, and then NGEX, obviously, our algo is drawing that because of the IC. But again, upside 63.55, 63.60 will be utmost importance, and that highest sensitivity level on the net stack command I just discussed. So drunken sailor range, pretty wide today, obviously a low exposure area. This will be driven by intraday volumetrics, and you can see why the IC actually matters pretty significantly for price action, kind of what we discussed over the weekend with our deep dive in the Bell newsletter. And then our DEX transition, 63.20, 63.25. Again, that was a key area yesterday. It'll be a key area to chop around and stay above today. Pre-market, it looks like we are at 63.34. So we'd be opening just above that overall DEX transition, but under the GEX transition. So again, extreme choppiness within this overall range today will be driven by, again, volume metrics intraday. So it's trading Directional trading may be very difficult today since the IC is in place, as well as these transitions within the overall middle of the IC, as well as the drunken sailor range, which is low exposure. Basically, you're on the ocean without a rudder or a sail, and you're just getting bounced back around and forth between these exposure areas and the mechanically opening of intraday market participants. So that's why we say if we're in the overall drunken sailor range, this can be a very difficult trading area. That's why we'd rather have the confluence and confidence of moving above for a long or moving below for a short. And then if you're doing trading within the overall drunken sailor range, these need to be very small positions as well as very short-term opportunistics, unless you are trading an IC today or some sort of option structure that takes advantage of most likely these two goalposts that are going to be in place, which we discussed over the weekend and have extensive education content, as well as intraday within our overall Discord. We discuss trades that are available to our members, taking advantage of the option structure that we're looking at. So with that, I'll answer a few questions. I see we have a few questions. So Jim asked, I'm a former subscriber and considering coming back yesterday. I sold some calls above COTMC and above 6,300, but of course we broke those levels. Were there real-time indicators that I've sent? Yes, Jim. Yeah, absolutely. So discussing yesterday, we can go back. I can look at the SPX. And so if you watch our pre-market prep from yesterday, once we get above these ranges that we discussed, the drunken sailor range was 6,300. We'd outlined that pre-market. That was a large confluence area. Market trend model was to the upside. So you go back and look at the market trend model early in the morning here at 9:59, 10 o'clock. We're already breaking above these shorter term momentum moving averages. And you see positive cumulative tick, positive plus 1,000, minus 1,000 block orders. So all of that was all systems go to the upside. Then when you cross across that drunken sailor range here, you're entering a more call dominated call gamma structure. That's positive, right? That's supportive. And then what occurs with that, obviously, mechanically opening and closing of contracts, which we're seeing via our intraday volume metrics. Our book is getting longer via opening calls, right? So we're taking positive delta and we're adding positive delta to the overall complex, and the market makers and dealers are negative or short those calls, right? So they have to hedge flat, and the only way to hedge flat is to buy underlying, and that's what was continuing most of the day as we grinded up through this area. Our volumetrics were telling us, market trend model was telling us buying was occurring within the overall market. So that's all positive. And then we crossed the drunken sailor range and 6,300. So we were into a positive gamma call dominated environment. So again, very supportive and very grinding type action to the upside via all the mechanics that were occurring. Charm was supportive yesterday via net stat command that we were watching. And then we were watching 6320 to the upside. It was going to be most likely that area that we saw some stalling, and we just oscillated around that area, and then we continued to move back to the upside. So hopefully that helps. 6,300, once we were above, we were going to be full long. I think we discussed that about pre-market. So make sure you go back and review that yesterday. So yeah, I'll show the SPX chart. So scalp short spreads at the extremes. So Sherman, I can't give any advice on how to trade those. We just do discuss trades within our overall Discord, but I'm not going to give you any advice specifically, obviously, on how you trade or how your risk management is. But the extremes or legs are opportunities to do spreads, and we did spreads intraday. Everybody posted their trades, and we had good outcomes from multiple members that were doing spreads. So anyway, SPX chart for today. Yep, I can do that. And there's other opportunities too, not just spreads. We have people doing Berkowing wing butterflies, verticals, diagonals. Just a multitude of options within, if once you understand the overall option structure and where we may go and where we may not go, and understanding that, I think opens up a lot of doors and opportunities to put on whatever your SPX or whatever your trading plan is and whatever your risk profile is. And we've been discussing about asymmetric risk. Really, this past couple weeks, we had an open mic with members on Sunday, and we discussed asymmetric risk using option structures and how to structure those. So yeah, so Great, Jim. We'd love to have you back. Yeah, we've ramped up our tools, our education, just within the past year. It's very extensive now. And we're using the tools. Our game edge team are traders, and we're using the tools every day. We show you how to use them. We describe how we're using them. We have extensive community of former market makers, former money managers, people that are managing money within overall Discord now that are posting kind of how they're using our tools. So yeah, anyone integrate your stuff into an AI or algo? Jim, no, we're 5 minute, 1 minute to 5 minute on all of our data, and then our automated channels. Some of our automated channels still run 15 minutes, but you can manually run the commands for yourself also, depending on what your level is. Sherman, yeah, we use algo programmed algo stuff, and we're integrating AI. We have a chat beta up here within our web app, so you can ask it questions, and it will actually give you answers from previous content, educational content we posted. And then, yes, we are using AI and algos for our levels, which are proprietary. And then we're starting to integrate algo trading into some stuff behind the scenes. So APIs is coming. We're working on we want to get our system completely stable. That's what we're working on at the moment, just because obviously when you add in an API, your data has to be perfect and running flawless. So that's what we're working on at the moment, just shoring up everything on the back end via our data and providers and calculations and everything to make sure everything's running smooth before we start providing anything like that. So yeah. So all right, hope that helps everybody. Again, structure, call dominated, above and below spot price, will be most likely within the IC as well as the drunken sailor range and low exposure area. So yeah, so hope that helps everybody. Thanks for joining us this morning. If you have any questions, let us know. Again, follow us on X as well as YouTube. You'll be notified when we go live, as well as posting this morning content as the market opens. All right, everybody, make it a great day. Thanks.